So what's the real reason traders blow up? I've seen many traders do it over my time. Been close to it myself a few times, but luckily I've recovered myself and forged a very successful trading career. Some of those traders that I've seen blow up, some of my own traders, I've managed to coach and refine and improve and learn to become successful traders. Blowing up isn't the end of trading, but the real reason traders do blow up, it's not because of bad strategies, bad ideas. It's because they need to be comfortable with anything can happen in the markets at any time. That is the real truth. Uncertainty is real. You can control everything you possibly can, and that's what I work on with myself and everyone that I've worked with on the trading floors in my history. You can control everything leading up to that moment of you putting on that trade, but once that trade is on, the market can do what it wants. And it's very, very important to be comfortable with that uncertainty. So, some of the reasons that traders don't deal with that uncertainty and do blow up, I've got 4 core reasons. Reason 1, there's no plan. They go into a trade, they've got an idea, but they don't have a plan for if things go right and if things go wrong. They don't have a proper structure to their trade. And it's something we very much teach the World to Trade and myself. I've written about it in my book as well that's coming out soon. And so it's having that plan, very simple. Structuring that plan, we talk about it in our foundation series on YouTube. Having that plan is absolutely vital. So not having a plan. 2, this is a big one, psychology. They say trading is 80% psychology, 20% just the numbers. And it's the ego. It's that belief that the market is wrong and that you as a trader are right. This happens a lot. You feel you put all that hard work into your trade, you've got this idea, you buy it or sell it, and you think, right, it definitely should be going up or definitely should be going down, but it's going against you. And you have that paradox of you've done all that work and you really believe you're right, but the market is showing that you're wrong. And you have to have that psychological battle with yourself. Do I get out my trade? Do I add to my trade? Is the market just temporarily going against me? But there has to be a point where you have to put your ego to bed and then you revert back to number 1, which is that plan, and say, no, this is my entry, this is my exit, this is my stop. Take the ego away and run that process. That's what's very important. Again, number 3, straight up to that, I've mentioned it a couple of times already. No process. So no plan, your ego, and then the process. We talk a lot about our process: identify, execute, manage, and evaluate your trade. The 4 core pillars that we surround all our trading education with at Teach You Well to Trade, and myself and all the hundreds and thousands of traders that I've trained and coached over the years. So just having that random approach. We talk very much about anchor points and blueprints, checklists, making sure all of these things, these checks and balances are there so you understand what you're doing before you're trading and you have a plan for any inevitability. Number 4, I work with this a lot with myself and other traders. It's recoverable losses. But in this sense, in blowing up, it's unrecoverable losses. It's those losses going too far, so you can't recover them. It's very simple. I work with a very simple process on my own risk. One trade shouldn't cause a terrible day. One bad day shouldn't cause a terrible week. One bad week shouldn't cause a terrible month, and one bad month shouldn't cause a terrible year, essentially. And I talk about expectancy a lot in the book that's coming out, and when I'm teaching traders, it's having that expectancy of your upside and then matching that with your expectancy of your downside. Okay, and running that in your own kind of risk profile, which is very important for yourselves, and it's something that will be pertinent to you. How much you're looking to make each day. You shouldn't be losing more than that by a long way, because you're trying to get that expectancy, that run of more up days than down days, right? But if your down days are bigger than your up days, you're not going to be in the game very long. But I go into this a lot, and I'll probably do a YouTube video on expectancy in the future. So in essence, to solve these problems, what do the professionals do? Because that's why I'm here. I've got 20 years trading experience. I've trained traders around the world, run a education academy for one of the biggest trading firms in the world, and educated at a top 10 UK business school. So I have a bit of authority when it comes to speaking about what these professionals do. I have my own experience and the experience with others. So simply, you've got to, number one, no plan. Well, have a plan. What are you trying to get out of each trade? What are you trying to get out of trading as a whole? And you kind of work down from there, really. It's the most important thing. You have an overall arching, right? What do I want from trading as a whole? And then you kind of stagger it down to then your daily and and your actual trades. So, if you want to earn X amount, I wouldn't recommend that. I would probably put a number on successful trades, and I'd look, right, I want to make 1,000 successful trades this year. Okay. And then you work down from there. And then it comes to the day in your actual trade. Is this going to be a successful trade? What's my percentage chance of this trade? I've worked out through my planning that this trade that I'm doing right now affects every goal that I have put for myself, lifetime, yearly, monthly, weekly, daily. This trade encapsulates that of what I'm trying to achieve from that trade. And I have a plan for if I am wrong. And that is the most important thing. We talk about stops. I'll do another video about stops and managing your downside. We talk about it a lot, but there's almost a two-step process. Is one, stop losing money. Two, start making money. And if you don't have that plan for where you're going to be wrong, at what point are you wrong is the key message, then you're going to blow up. And that's the whole point of this YouTube video, right? If you don't understand where you're wrong and you can accept that, again, moving on to number two, that moves on to your ego, then you're gonna, it's all connected, because it goes into the unrecoverable losses as well, which is number four. So you don't have a plan, you don't know where you're going to be wrong. So then your ego is just going to keep kicking in because you don't have a plan and you don't have a process. So you don't, with your execution, you need an entry and a exit and a stop for where you're wrong. And then it's going to lead into number four, which is unrecoverable losses. So there's this plan and process, which will help with your recoverable losses, because you know where you're going to be wrong. If the market just does what it wants, which it generally does, and goes against you, which then takes the ego out. So a lot of the plan and the process removes the ego. And this is what's the most important thing for me as a trader and for the traders that I've seen that have succeeded. If you have that plan and that process, you can remove your ego and you can deal with recoverable losses because they're in the part of the plan, and that's fine. I say to my young traders, look, losing money is fine. You have to learn from those losses. Again, going back to the process, it's the evaluation phase. If you lose, fine. What can we learn from those losses? How is it going to make us a better trader moving forward and have a higher quality of trade? That's fine. As long as we do that, we keep our losses recoverable, we can then move on to become successful traders. Because as budding traders or maybe experienced traders watching this, you're going to do thousands of trades over your lifetime. So don't let one or two trades where your ego's got in the way and the losses are unrecoverable put you off trading forever, because I see that happening over and over again. So this is a very, very quick discussion on why traders blow up. Hopefully some tips of how not to blow up. I mean, the unrecoverable losses is a big one. Managing your downside is so important in what we do as traders. And a lot of that is removing the ego, and having that plan and having that process. And I talk about it a lot. It's going to be, it's in my book that comes out 2026, summer 2026. So look out for that. And we will do some more YouTube content around that risk and managing that downside, and tricks and things that professional traders, put in their plan and in their day-to-day process to limit those. Because once you control the downside, then you can really focus on that upside and profiting from the markets. Okay. So it's a bit of a whistle-stop tour and how not to blow up. I hope it's been helpful. There's going to be more content coming weekly. If you want more, I have a foundation playlist on YouTube, which is very useful. And the website is being updated regularly, teachtheworldtotrade.com. So thank you very much for watching. Thanks for your time. Stay lucky. And as always, see you on the other side.